I spend less than 90 minutes trading a day, and on the good days I can make up to $5,000. When I started my trading journey more than 4 years ago, I didn't start with thousands of dollars. I was actually losing money all the time for about 2 years, and I was always trying to find that perfect strategy or some kind of secret model. And then I decided to focus only on one simple strategy where I would risk $50 to $100 a day. But trust me when I say it, that completely changed the game and got me into a profitable stage. So in this video I will show you the exact simple strategy that helped me scale my small trading account into something huge in less than 90 minutes a day. So let's get into it. Alright, so the first thing, as always, before we start with the video, I want to show you my results with this strategy. So you can see almost $30,000, and you can see some winning days are even over $5,000, some are over $6,000. And one more thing that you can see is win rate is more than 85%, which I think is just absolutely huge. So now that you know that this strategy actually works, I actually use it, and I'm not just learning you something that I don't personally use, we can get into the video. So let's start with what the trading system is going to be. So we are going to have few different types of system that can happen in the market. One is going to be for the trending market, and one is going to be for the consolidating market. So the first one right here, you can see that we are just kind of consolidating in the same place. For example, market is just going up and down like this. So what we will do in this case is we are going to look for some kind of manipulation. So we are going to look for the manipulation of the downside, and later on for the manipulation of the upside. So we are going to go into details of how to actually determine what the range is and what exactly steps are in these market conditions. And then we are just going to have a simple entry and a simple target. In this next example, when the market is actually trending to the upside, we are going to wait for the pullback where the manipulation happens, and we also retest this box that I'm going to learn you later more about. So basically what we will do is we are just going to continue that trend to that direction, and this on the right is going to be what we are going to be entering the market with. So we are always going to be entering on a disrespect of this fair value gap, so more on that later. So what I'm going to be showing you today is the three simple setups. So the first one is the continuation setup, then we have the box theory, and we have the first candle rule. So dependent on which one happens in the market is the one that you will be using. So the continuation setup, as I already told you about, is just gonna be when the market is trending. For example, in this example, you can see the market made a push to the upside, followed by a pullback, and then after that we made one more push and one more pullback followed by a push. So this is a clear uptrend. So this is the example of the continuation setup. So we are basically just trending to the upside, and in this case we will just be looking for longs in the market. And then when the market is trending like this, all we are going to wait for is for the boxes to get retested and for our entry model to actually get presented, which of course we are going to go into way more detail about. And of course you're going to have a stop placement, target placement, and where exactly to enter. So everything is going to be pretty clear, and you can see how right here we actually came back, respected this box right here or a fair value gap, went to the upside and disrespected this fair value gap right here, which made us enter, and we targeted to the upside. Followed by that later on we came right here, we started going to the upside, disrespected this box or a fair value gap, which made us sure that yep, market is continuing a trend to the upside. So basically it's pretty simple like that. And now let's talk about a box theory, which is gonna be when we are consolidating in the market. So when we have some kind of range, as you can see like this, how are we gonna behave in the market? So the first thing that we need to understand is how it is actually working. What is the theory? So simplicity is profitability. So that is the first thing that we need to know. It's nothing complicated, it's actually really simple. So right here we have a higher time frame candle. So for example, this candle right here is a lower time frame kind of consolidation to the upside and to the downside. So it's basically a consolidation on the lower time frame, but it's a simple higher time frame one candlestick. So basically what are we gonna know with this simple candle? So when we draw the top, the bottom, and the middle of the candle, what we will know is that we have two sides. We have this side up here, and then we have this side up here. So now what is the main difference of these two sides? basically when we are in the upside of this half, there is gonna be a really strong resistance of sellers, because of course if the price goes to the upside, price is more expensive, a lot more people want to sell the market. So when we are in this zone to the upside, which is basically a premium zone because it's more expensive, because the discount is right here, but this right here is premium, we do not want to buy there because the price is too expensive and there is a lot of sellers in this area. So what we ideally want to do is we want to sell when the price is too expensive. So we want to short the market and target to the downside. And then the same thing when the market goes down, we do not want to sell. We actually want to buy. Why is that? Because the price actually dropped in the discount of this box theory. And what does that mean to us? That actually means that the price at the moment, for example, it's right here, price is way too cheap for us to be shorting the market. We want to look for the buys in the market, because in the end here there is going to be a really strong resistance of the buyers. So the box theory for us is going to be when we have that box that we just talked about like this, and we have our middle, when we are in the downside, we want to likely see some kind of sweep in the market, which for example we had a sweep of the box right here. And why is that good to us? Because in the end, if the market sweeps to downside like this, a lot of stop losses that were here that people placed like this are going to get triggered, and a lot of people are going to lose money, which is a manipulation in the market. And then followed by that, market is of course going to start buying, because as we talked about right here, there is a lot of buyers because this is a discount range of the box theory. And then after that, we are going to target another side of the box theory. And then of course, after we take that out, we are again going to want to kind of sell the market, because right here there is a lot of sellers and the price is really expensive. So you can see right here, this is the real example how it would actually look in the market. So we have a range in the market. As I told you before, we had one candle because it was just a higher time frame candle, but this is what it looks like on the lower time frame. We have a range, and what happens is we get a sweep to one side, which means here there is a lot of buyers. We just swept all of these stop losses. And what can we expect from the market? We can actually expect that market is going to start buying because the price at the moment is really cheap. And where is it going to buy towards to? To the top of the box theory. And why is that? Because when we come to here to the top of the box theory, for everybody who bought the market right here and price went to right here, they are going to make money. And when they come here to the top of the box theory, what they are going to do, they are going to sell the market and take their profits. And that is the same thing that we are going to do, because we are going to buy at the bottom, for example, of the box theory and sell at the top, or the other way around. We are going to sell at the top and buy at the bottom, which is just shorting the market. So here we are in the market right now, and if we take a look, this is a simple trending market. So here we are not going to use the box theory, but we are just going to use simple fair value gaps or boxes to actually determine when the market is going to continue going to the upside so we can profit on it. So the first thing that we need to notice is how the fair value gaps are reacting and pushing the market to the upside. So you can see right here a retracement and then a bounce back to the upside. Followed by that, we had another retracement into this fair value gap and just bounce back to the upside. So what we want to see is a retracement into this fair value gap. So we have a low inside of a fair value gap. If we manage to retrace down into here, we are just starting to look for the entry model to of course target towards the upside. So let's see if we are going to get that retracement to the downside. So actually we did right there. So what we do is we scale down to the lower time frame. So it can be 5-minute time frame all the way to the 1-minute time frame. So how do you determine which one? After I show you the entry model, the biggest time frame that is presenting the entry model is the time frame that we take the entry on. So right here, what is our entry model? We enter from the last fair value gap. So basically I'm going to move this to the side. So this right here is the last bearish fair value gap because we enter on the disrespect of it, as we already learned about. And right here we actually made a new fair value gap. So I'm going to actually move this one so it doesn't confuse you. You can see that we made a fair value gap. So the point is, we came to the downside, we entered this bullish fair value gap that is pushing the market to the upside. So all we want to see is this bearish fair value gap that is made while going to the downside that will push and try to push the market to the downside, we want to see it fail, because if it fails, that means that market wants to go to the upside. So let's see what will happen right now. Okay, so it actually fails. So what we do, we enter the position, we put our stop loss underneath the candlestick, or we can put it underneath the low. It does not really matter, it's all up to you. And we target liquidity to the upside. So for example, 3.7 risk to reward, like this it would be 5 risk to reward. So basically it's the same thing, and let's see, will it actually play out to the upside? And there it is, so beautifully played to the full take profit within, like, let's see how much, within like half an hour. So basically in 30 minutes you would have gained either 3.7 or 5 risk to reward, which by the way, if you were to risk 1% on a $100,000 funded account, or even your own $100, this would actually be $500 with your own capital, or with a funded capital it would be $5,000. So profits can actually be insane, but of course you need to be really consistent to actually achieve those results. Okay, so here we are in the second example, and this example, as you can see right here, it is not trending, it is just basically making a movement to the downside and back to the upside, and it is not headed anywhere. So this is going to be our classic box theory right here. So what we want to do is we want to mark out the lowest point of this range, which is going to be this one right here, and we want to mark out the highest point of this whole range, which is going to be this exact point right here. So all that we want to see is we want to see a manipulation either to the upside or to the downside, where of course we know if we go to the downside there is going to be a lot of buyers in the market, so we want to look for the long setups. And if we head to the upside and sweep the high, we want to see a short position because there is going to be a lot of sellers. So if I fast forward the market, let's see what is actually going to happen. So it looks like we are headed for the upside, and there it is. So basically right now we are right here and we went to the upside, we manipulated the high of this range. So what we want to do is we want to target to the downside and actually target these lows right here, the bottom of this theory, which you can see right here. This is kind of the box how it's actually happening, but what is the most important thing for us is the highest point and the lowest point. So basically what we are going to do right now is we are going to wait for an entry model. So as we already talked about, we want to see a last fair value gap in the market on the 5, 3, 2 minute and 1 minute time frame. The highest time frame that has the fair value gap, and you can see in this example, is the 5 minute. We want to see it get disrespected towards the downside. So let's see if that is going to happen. So right here, this is not a closure below, so we are still waiting, and let's see. And there it actually is. So what we do right now is we enter the short position, we put our stop loss above the actual candlestick, and what we do is we target to the downside. So we target this liquidity to the downside right here, and that is 3.4 risk to reward. So let's see if that is actually gonna play out all the way. So it looks like it's floating in healthy profits, and there it is. So this trade probably took about 20 minutes, so 25 minutes from entry to take profit. So basically you can see right there how beautifully this is actually working in the market. Okay, so now that you know the model and everything, all you have to do is actually go test it out yourself and execute it on the chart. But before you do that, if you want to maybe claim a free playbook of this model, you can do exactly that down there in the description, and it is going to help you actually take trades, and it's going to be easier to trade this model in the market. Also, one more thing, if you are maybe interested in getting mentored by me one-on-one, make sure to go down there in the description and check out if there is still some spots available. And of course, the last thing, if you like the video, make sure to leave a like, subscribe to the channel, comment some questions if you have, and basically with all that, I'm gonna see you in the next video. Peace.